What's going on, Twitter? I figured I'd give you guys a little bit of EDU because I promised it, and yeah, I need to provide a little bit more value. I'm lazy as fuck. So we'll go a little bit over calling the top on SPX. I think that was Wednesday. Yeah, Wednesday, and we'll go over really what I saw in the indices as well as tech confluence. And just the overall environment that we've been trading in that really helped me utilize this trade. I didn't collect the overall like 8 bags full position, of course. I don't even think I got 8 bags on one singular con, although it did run that. I think it ran like 900% at highs. I was calling for 10 bags on this position, but I think I sold my last call on 500%, 550%, something like that. But then I also had an additional QQQ trade that ran 4.5 bags, so I was cool with it. I didn't really need all the continuation to be happy. Obviously it was kind of like half sized. It wasn't like super heavy. Kind of wish I did throw heavy size on it. I had a lot of conviction in it, and we'll just go over really what I saw and my overall view on in the market at the time. So first of all, I said QQQ has a distributive top here. I noticed a lot of selling that was really absorbing any sort of bids at a flat top resistance, right? So when you're at a flat top resistance, there's a ton of liquidity generated off of that resistance. And overall, what you could see is you could either see a path of least resistance, meaning every time you test that resistance, you absorb more and more and more asks and passive sellers sitting there waiting to get their orders filled. And then eventually you could get that push through on absorption and squeeze right through easily. But I didn't. That's not what I was thinking. I was thinking it had a distributive top, meaning that sellers were staying really active above that flat top resistance, and then each and every time we made a higher low into an attempt to break out and move higher, there was no willing bid, aggressive bid to pinch prices higher above a particular breakout level. So that's why I said this could be creating a path of least resistance or sweep the buy side. I'm focusing a short into the PM session. That was at 114, right? So we head over to QQQ. Here's QQQ. And then I want to talk a little bit about the Apple event and kind of how that also triggered me into really thinking about how this one could really go. So here's your buy side liquidity sitting off of 375.64. When you're in a low liquid environment, where we've been in an environment, guys, where liquidity has been really dry, and especially in the afternoon session or the lunchtime session, and we've been really seeing sell the rip by the dip scenario for the most part, meaning there's intraday swings up, there's intraday swings down. Both of those, obviously, that's been in the environment where obviously I've been seeing this slow grind higher after a massive markup. Could really lead to some micro distribution into a leg down, right? So that's first things first. Understand your environment when you're trading, things like that, and then let's just talk a little bit about my plan and what I saw. So like I said, this could be creating a path of least resistance or sweep the buy side. I'm focusing a short into the PM session. That was at 114. So we come over to 114. 114 is right here. This candle right here. So ideally what I was looking for, guys, was obviously a sweep of the NASDAQ, because the NASDAQ was stronger than the S&P. Overall, tech was basing a lot better than the S&P. I think a lot of risk-off assets were getting hit. I can't remember exactly, but maybe energy was getting hit. I can't remember what financials were doing, but overall, tech was stronger than the massive bunch of industries that are grouped into the S&P, right? So let's just go over and take a look at the S&P. We had a very major flat top resistance, and we really didn't have a very well established aggressive bid off of this previous seller's ask before our leg down, or this general range of your 15-minute opening range breakout, like seller ask range. Sometimes I'll take the candle body for holding a support, and there was really no well established bid in the market. It was kind of all just like pushing below, creating some sort of flat bottom type of support. And then what we really had, guys, was we had this massive breakout level from yesterday. This is what I was watching on the S&P, at least. So we had a massive breakout level on the S&P, followed by kind of like an artificial price movement based off of exit liquidity of the Apple event. So it was kind of like a sell the rip environment on the Apple event as well. As soon as the Apple event started, we pushed higher, and then from there on out, it completely dragged down and resulted in a new low of day, and actually a whole entire about 80 cents lower, 70 cents lower. Yeah. So this was our previous day kind of breakout level, and then pretty much above this, guys, it's imbalance and an artificial price movement, in my opinion, right? So right here, it's kind of like artificial price. This is kind of like your resistance, like in this general range, these general confines right here, from here down to the breakout before the Apple event, right? So that was my general range to really start watching for a short, understanding that there's no aggressive bidder in the market. So I talked about how QQQ had a very distributive type of top. You go over to QQQ and you're going to see we did have some sort of established bid off of your 15-minute orb high. Your 15-minute orb high is technically up here. Your 5-minute orb high would be right here. But like I said, you don't need to take the top wick. We kind of got our retracement, flat bottom resistant support, and then obviously a push higher. Now, what I was watching was, like I said, tech was stronger, right? So tech was weaker the days prior, but obviously now it's probably looking a little bit stronger. Not necessarily stronger, but very similar. And this is kind of acting as your buy side liquidity, right? So when you're in an environment where there's very low amounts of liquidity and there's no really aggressive seller or aggressive bidder within the market, meaning aggressive buyer, then you're going to make these series of higher highs in higher lows, but these higher lows and higher highs are almost wedging into some sort of level of liquidity that is needed to really reverse price, because there's no aggressive seller coming to move their ask down and really pin price underneath a level to obviously reverse, right? So like I said, very, very, very slow higher lows being formed after a swing high, and then we make a new higher high literally an hour and 45 minutes later. That is just no momentum. There's no momentum behind that move, right? And kind of what we're doing is, I'm not a big pattern trader, but we're really kind of wedging, because it's a wedge really resembles low momentum and no well-established bid in the market. We're wedging into buy-side liquidity. So I saw the sweep on the NASDAQ. I saw this overall spread compression right into buy-side liquidity. I saw the reclaim of the level, really low, weak volume. And then what we really saw on the S&P for the go-ahead short was we saw this higher high being created, meaning we kind of sweep this flat top resistance that we built a lot of liquidity off of. And then we retested that artificial price movement from the Apple event that was exit liquidity. This move up and move down, we kind of tested into that imbalance. We made a new high a day, and then massive volume came in. Not massive, but massive for the time being, relatively speaking, for the PM session chop. This has been your highest volume bar literally ever since 1240. It was an hour later, highest volume bar in an hour, and very low volume leading into that new high of day, as well as buy side liquidity on QQQ. And also what I saw, guys, was, whenever you see this really tight spread compression, it's obviously going to lead to expansion at some point. You can't just stay compressed and sit a slow grind higher for that long on QQQ, a very liquid name. What you're going to see is some sort of breakdown or like I said, path of least resistance being created, and then an overall absorption of this general supply / buy side liquidity, and then break and base and go. We obviously did not see that. Or sometimes what you could see, guys, is you could see a small tag on liquidity to the downside, right? You making these higher highs, higher highs, higher highs, higher highs. No willingly bid is willing to establish itself off of these higher lows. And then you'll see some sort of price movement that kind of sweeps down and then sweeps not that low, but sweeps down and then sweeps right back up to move higher, and then a break, base. Well, I have magnet on, but you get what I mean. Break, base, and then go. but that's not what we got, right? We got this distributive candle look. And then what I saw was a lot of equity confluence, right? So I saw, what did I see? I saw Microsoft wedging into a supply. This is what I saw. Microsoft. I'm not a big pattern trader, but I obviously understand that this range all the way up into previous high day is a range in which Microsoft could really propel my trade. And then I said this could be the top 119. And then what I said, guys, was I said, we need to really get a sweep on the buy side. Need more of a sweep of buy side. Barely got tagged. That was at 124. 124 was right over here. So this reversal bar off of this, it barely swept it, made a shooting star looking candle, and then it started to continue higher off of this bullshit trend line, and then it swept more into that range, and then that's whenever asks really got triggered. A lot of sellers really got triggered with full absorption of those bids attempting to pinch this above this level or this high or something like that, right? So this was definitely some sort of like bearish imbalance sitting over here. It was overall really clean trade. I grabbed the light size QQQ 375s. I had to cut any long I had. I was positioning short. I really had conviction into this trade. And then obviously I took the puts right here. I said 240 here. Let me know when this is at like 8.0. I realized this was really going to reverse, guys, because at the end of the day, guys, I mean, there was really no well-established support here. This was all kind of just lower volume chop, right, into higher highs. Whenever sellers really initiate that full absorption of this level and it's ready to move its way down, we obviously got our break of structure in our retest right here. We kind of held under that, formed a healthy base underneath that break of structure, and we're trickling right back into our support. And then, yeah, you eventually just give it up. Like, I didn't think that this could really push all the way down, and then I was really managing my risk, but I was accepting the risk on the overall trade to obviously see downside continuation, and then we started entering into our fluent price movement range where we saw these larger, more like moves with more velocity, and then obviously that's where I got paid, right? So that was basically it. I mean, equity confluence wise, like I said, Microsoft was wedging into a supply. It was actually one of the more relatively strong names on the day, so I figured that could really propel my trade. Obviously the NASDAQ was really stronger, so those names that are holding up the NASDAQ are going to be very crucial in terms of looking to position short. You have your Microsoft, you have your Apple was already in actually a lower low, lower high type of environment. But yeah, very clean trade. Here was Apple, by the way. Apple was already, wait, where was Apple? Apple was, here's Wednesday, 13. Yeah, so Apple was already in a very bearish looking environment, lower lows and lower highs. So those two market leaders, two of the biggest market caps in the NASDAQ, I personally loved. Yeah, Amazon wasn't really strong. Every confluence was really there. So yeah, peace.